recording. Good afternoon once again. This is Jules Epstein-Hebert, Director of Membership with Inclusiv. Very excited to have you all today for a discussion with the NCUA. We're really excited to have the Honorable Rodney E. Hood, board member with the NCUA, here with us today. We're going to hear from Rodney in just a few moments, but before we get into that, I wanted to go over a couple pieces of housekeeping. First of all, this is episode 4 of season 4 of the Inclusiv Network's Town Hall series. Really excited to have you all back with us again this week. And of course, there's a lot of things going on at your shops and in your worlds, and of course here at Inclusiv that we'll be sharing later on in the program. I did want to remind you all that this is going to be recorded. We're recording right now. We are going to be sharing the slide deck from today's presentation, which is really just a shell deck. It's more going to be a conversational focus today, but we will be also sharing the recording with everybody on the call, as well as any other registrants that weren't able to make it. And we'll be hopefully saving some time for audience discussion towards the end of the presentation. So feel free to get active in the chat. You all should have access to the chat. Let us know where you're calling in from, where you're representing. We'd love to hear from you. And also feel free to use the Q&A tool if there's something that comes up throughout the presentation that you want to ask about. Wanted to share with you all the agenda. After the welcoming remarks, we will be going right into it, a conversation with the Honorable Rodney E. Hood from the NCUA. And Rodney, thank you so much for being here. We are also joined by the Inclusiv CFO, Evan Schaefer. Evan, thank you for joining us as well. After the discussion with Rodney, quickly before we go into questions from the audience, we'll just review some of the upcoming events that you may want to be participating in over the next few weeks. And then again, we'll get into that audience discussion. Now, just a brief reminder, the inclusiv.org website is a wonderful resource and it's constantly being updated. Please do make sure to, first of all, bookmark inclusiv.org and check back regularly for the latest updates. Going back, without further ado, I just wanted to again welcome you all. Welcome our very special speaker. And now I'd like to turn it over to Evan to give us a little bit of background about what we're going to hear from you all today and to introduce Rodney Hood. Thanks, Evan.
All right, thank you very much, Jules, and welcome to everybody. Welcome, board member Hood. Thank you again so much for joining us.
Thank you for having me. I'm delighted to be here.
All right, so today we're going to cover a few topics, but a focus a little bit on the capital markets as well as CDCUs, and then turning towards looking towards the future, both for NCUA and for you, since you're ending your term here at NCUA. But first, just to go back to the Capital Market Symposium from last week. We saw you here in New York at the Credit Union Capital Market Symposium that you hosted at the New York Stock Exchange. Investors don't always think of credit unions and capital markets access necessarily. Could you share with our Inclusiv members some of the highlights of the symposium and its significance for the future and growth of our credit union industry?
Well, great, Evan. But first and foremost, ladies and gentlemen of Inclusiv, thank you for allowing me to have this opportunity to join you today. I am such a fan of the work of Inclusiv because of what you do to bring economic and community development and empowerment to so many marginalized communities throughout the United States. So I love working with you all, and I think we do have a shared agenda when it comes to, again, lifting up intractable issues in communities so that people can remove those barriers to full-on financial inclusion. So Inclusiv, I certainly do appreciate all the work you do each and every day. With that being said, yes, Evan, I was honored to host the NCUA Capital Markets Summit just last Tuesday in New York. And I have to tell you, it almost seems like a month ago, so much has gone on since then. How did NCUA, National Credit Union Administration, come to have the floor of the New York Stock Exchange and to have a beautiful meeting room where we could have a convening that had almost 150 folks in participation? You all, many months ago, about 7-8 months ago, I had the opportunity to meet with some of the leadership from the New York Stock Exchange. Well, we were talking about credit unions and what they're doing in today's environment. But you all, I must tell you that that meeting, it was pretty much a way for them just to say hello, and they were being polite. But through the course of the meeting, when I mentioned that credit unions today are doing asset securitizations to the tune of $450 million, which was just recently done through the Capital Markets Group at the Stock Exchange, or I mentioned the trillions of dollars that credit unions have in interest rate swaps, the work that credit unions are also doing with secondary capital and subordinated debt to the tune of $515 million in those instruments being used to date. So it went from a very polite, casual luncheon to, wow, NCUA credit unions are more integral to the capital market system than many of the folks at the stock exchange thought. In fact, one of the hosts of the meetings, he mentioned when he was a little boy, he had a credit union account, and every December, right before the holidays, his parents would take him there to his local credit union in Philadelphia, and he would withdraw a lot of funds so he could buy gifts and all that for friends and family. So he pretty much remembered those days of yore for credit unions, but didn't realize what today's credit unions were doing. So my comment to that gentleman and the rest of the New York Stock Exchange leaders was this: credit unions today are not just used as a passbook savings bit of a relationship. Today, credit unions touch the lives of 135 million individuals throughout the United States and beyond. That's roughly 1/3 of the American public has a credit union relationship. I went on to talk about how credit unions have $2.2 trillion in loans and assets, 1.5 trillion in loans outstanding. That means that credit unions are making the loans for people to get cars to go to and from work. They're getting the mortgage loans that they need to have sustainable home ownership. And they're also, you all, getting the loans that people need for Main Street businesses. That's 1.5 trillion. I also went on to talk about credit unions being very, very well capitalized in today's environment. Our capital levels now approximate 10.9%. That's some 400 basis points beyond the statutory requirement of 7%. So when I talked about some of these numbers, it went from, again, wow, to we need to give you all a platform to amplify what credit unions are doing on a global or more national stage. So Evan, it went from a polite, perfunctory conversation to what you saw transpire last week at the floor of the New York Stock Exchange. Yes, you all, last week, we were able to convene the NCUA Capital Markets Summit, where we're bringing together thought leaders and individuals to talk about a lot of the things that you all are working on each and every day for the safety of our 4,800 credit unions that we oversee. We're talking about balance sheet management. What are some of the things that credit unions are doing and need to be doing to make sure that there's no mismatch in assets and liabilities? Are they pricing their loans appropriately and accordingly? So with that 1.5 trillion in outstanding loans, were credit unions able to price those appropriately, recognizing that interest rates are being rising through the Federal Reserve's interest rate increases? So those are some of the things that we talked about. We also talked about, in addition to balance sheet management, talked about interest rate risk management. Again, 425 basis points is what we've seen come about lately, and we're going to probably continue to see even additional increases in interest rates. So how are credit unions buttressing their balance sheets? How they're making sure there's not that mismatch, again, of long-term assets being funded by short-term liabilities and vice versa. So what are you all doing in that space? And then also looking at liquidity risk management. You heard me mention that we have 1.5 trillion in loan outstandings. Well, you all, in some instances, that means that some credit unions may have a loan to share ratio of 70%. Some may have a loan to share ratio of 105%. So what are we doing around looking at additional liquidity sources? What are we doing around this rising interest rate environment? So over the course of nearly 4 hours, we had subject matter experts, and I'm so delighted that Inclusiv's very own CEO, Kathy Mann, was one of those subject matter experts, where she was on a panel and talking about balance sheet management and how subordinated debt and secondary capital can be tools that can be deployed throughout the credit union system. We noticeably have looked at secondary capital for our low-income designated credit unions, our CDFIs and MDIs, but you all may recall that in the early days of my chairmanship, I was able to work with our fellow board members, and we now have made it possible for even larger, what we call complex credit unions, to have access to these sources of capital. So $500 million and above credit unions now can also use those tools. So we were able to talk about that. We were also able to talk about what happens around loan participations as you all are looking for greater yield. Many of you want to sell loan participations and eligible loan obligations. So those were subject matters that we discussed in panels, recognizing the importance of affordable housing and sustainable home ownership. I thought it was fitting and appropriate that we had the federal folks there representing the federal home loan banks. So I moderated a fireside chat with the presidents of the federal home loan banks of New York and Atlanta, where we talked about, first of all, happy National Fair Housing Month. So we, of course, talked about fair housing and the work that credit unions do every day to make sure that we remain mindful of bias and discrimination, but more importantly, that we are exhibiting the wonderful tenets of appropriate fair housing. So in moderating that discussion, we talked to you all about how credit unions, I'm sure many of you who are joining us in today's town hall are active members of the federal home loan banks in your local communities there. And it was just delightful to have those two presidents where they could talk about how they want to have more credit union engagement, not only just for using their access to liquidity, but in addition to that, using some of their affordable products around helping provide a seamless approach to home ownership. All of the federal home loan banks, as you know, have a mission through their Federal Housing Finance Agency. That's their regulator. They all have a shared mission in promoting sustainable and affordable home ownership. So the federal home loan bank presidents wanted you all to know that they have tools available, not just liquidity, but they have interest rate tools. They have loan products. They are doing a lot of things to assist you all as you carry out your mission. Also, 10% of their earnings are asked to be dedicated to affordable housing and sustainable home ownership. So they talked about how they want to hear from the broader community around how do they use those tools to spur greater home ownership. We were able to talk about the work that I do. Many of you know, in addition to my chairmanship and now my boardship, or board of director here at the NCUA, no matter whether I'm a vice chair, as I was many decades ago, or chair a few years ago, or now board member, I continue to believe that home ownership is integral to the building of assets in communities of color and marginalized communities. So we talked about home buyer education. We talked about home ownership as that fundamental building block, but we also talked about partnership opportunities with groups such as NeighborWorks America. I'm very fortunate that I get to serve as NCUA's representative on the NeighborWorks board. So as not only am I the representative, but I was elected as vice chairman. So I wanted those federal home loan banks to know that many of you and credit unions are working with the NeighborWorks affiliates, and I encourage them to do the same. So we had the federal home loan banks. We also had the head of the Commodities Future Trading Commission. His name is Rustin Benham. He is one of the regulators that I would say we in credit unions don't often engage with, but he plays such a pivotal role in our work around derivatives, interest rate swaps. CFTC, you all, that is the governing body that does regulate commodities. And by the way, the interest rate swaps that many of you are using, the loan derivatives and contracts. So it was really nice hearing from the chief prudential regulator for CFTC around what are some of the efforts that they're doing. Many of you may recall that we did do a derivatives rule about 2.5 years ago, and that again was for those larger, more complex credit unions, like many of you on today's call, where you were giving greater transparency and greater opportunities to engage in, again, derivatives contracts to mitigate interest rate risk, to hedge against risk and things of that nature. So hearing from Russ Benham was delightful. And then we had the Wall Street Journal there to conduct a fireside chat with Mr. Benham, where, as you know, CFTC and SEC, they're spending a lot of time together looking at who's going to be that regulator who oversees cryptocurrency and digital assets. So it was a very full-on discussion around digital assets, distributed ledger technology, what's going on in today's environment, and the fallout from Sam Bankman-Fried's FTX debacle. So it was a very robust discussion. And then I would say one of the other big speakers was we had a financial expert who talks about resiliency and risk mitigation. His name is Leo Tillman. Leo Tillman was one of the founders of BlackRock. He later went on to have a very distinguished career on Wall Street, where he's now an advisor to Fortune 500 companies around agility. How do you really compete in today's dynamic marketplace? What do you do to buttress not only your balance sheets, but how do you really have a defense posture against black swan events that just come out of nowhere that have the ability to almost topple a lot of your well-executed plans? So in all, Evan, it was a day well spent with great dialogue. I am proud of the fact, you all, that we do have the archive tape from the New York Stock Exchange. So if you all would like to, Evan, why don't we make sure that we get all of you from Inclusiv a copy of the video so that you can see the panel discussions, you can hear the fireside chat that I hosted, and you can even see us, you all, the culmination of that half day at the Stock Exchange was being there for the bell ringing exercise, where we were able to sit there and watch and cheer as the stock market closed for that day. And again, it was an unprecedented moment for the NYSE and NCUA to come together for a shared mission. And I'm delighted that, again, Inclusiv had great representation. And it was a proud moment for me to be the convener, but it wasn't convening for the sake of convening. It was convening you all because it was a chance to provide learning, guidance. And again, I'm hoping that all of you, once you look at the video, you will be able to see some practical tools that were being discussed last week. Side note, had the folks at Silicon Valley Bank and perhaps Signature Bank had followed some of the things that we were discussing and identifying last week, I think perhaps they would have had a different outcome. What happened with Silicon Valley Bank, you all, was that they were not looking at balance sheet management. They were not looking at the number of liabilities on their balance sheet that had these short-term assets. No one there thought about the fact that the hot money, that is the deposits that they had, could easily leave overnight, leaving them without funding and liquidity sources. So I tell folks, I'm not casting aspersions, but I'd like to tell folks that the fact that we were having last week's half-day symposium had nothing at all to do with Silicon Valley Bank. I want people to know that we were not being reactionary, but it was just that we at NCUA, it's just good guidance and it's good forward-thinking regulators. We several months ago saw the need for having such a timely forum. So SVB, I wish they could have been there to benefit from it. And again, I'm not being cute or funny, but I just want you to know that we look at these issues seriously. We look at them pretty steadfastly. And again, it was a proud day for our agency, proud day for our system. And again, proud day for you all to know that even there from the stage, I echoed how we at credit unions are very strong, and that also the strength and vitality of the National Credit Union Share Insurance Fund. All those 135 million members, they all are fully insured up to $250,000 per account. No credit union member has ever lost a dime or a penny in an NCUA insured account if they have really taken advantage of that $250,000. And by the way, I know we've heard a lot from SVB regarding all the uninsured deposits. You all, we have done a really nice analysis, and over 91% of NCUA's shares are fully insured. That means that we do have a number of individuals and organizations that have 9% of their funds that are uninsured. And that just means that they have exceeded that $250,000 level but it means that they are now mindful, and many of them are already making the necessary adjustments to structure those accounts such that they don't exceed the 250,000. So another point that I just wanted to bear out for you, 91% fully insured, no one ever having lost a penny, and we have strong capital. I think that's really going to bode well for us as we go into the future. Sorry for such a long-winded response, but I thought it would really be good to give everyone a little context.
No apologies necessary, and thank you for such a robust description of the symposium. It sounds like a very successful day, a very busy day. We can definitely help to disseminate the recording of that to Inclusiv members, because it does sound very valuable. And it's great to hear that you hosted the fireside chat with the presidents of the Federal Home Loan Bank, because the origins and the missions of credit unions and the Federal Home Loan Bank, Home Loan Bank regions, very similar. And great resources for credit unions. And Inclusiv, a CEO of an Inclusiv credit union, someone who serves on our board, was recently elected to their home loan bank board in their region. I think it's the Indianapolis Bank.
Well, we also have one in the Atlanta area as well, you all. In fact, Evan, you're absolutely right. You all, one of the things that pleases me to know when I was blessed and fortunate to serve as your vice chairman of NCUA from 2005 to 9, I did a lot of work around affordable housing advocacy. I even served in the Neighbor Works Board then, but trying to work with the Federal Home Loan Banks. And needless to say, we weren't then welcome with the open arms that we're welcome with today. I think that largely a lot of the Federal Home Loan Banks have been largely comprised of community banks and not many credit unions. And there was always this bit of a tension. But to Evan's point, the Federal Home Loan Banks themselves, they are just like you all. They are cooperatives. They're all owned and operated for and by the members. And I'm pleased with the fact that now, some 15 years later, since I first encountered them, there is a mission to work more with credit unions. Just Evan, as you mentioned, the Indianapolis Bank, the Atlanta Bank also has a credit union member from the IDB Bank here in outside of DC, that bank. And then also you all in California, there are a number of not only just members, but board members of credit union. In fact, Federal Home Loan Bank of San Francisco, about 40% of their board is comprised of credit union leaders. So that day has changed. And that is why I was pleased to have both of the presidents there with us. And I think if there is some message that you will see from the videotape once you look at the archive, that they are even looking more aggressively at how do they partner with all of you on the call. Shared mission, shared value, shared opportunities, again, around building those fundamental building blocks for asset building and wealth accumulation in communities of color and underserved areas. And again, home ownership does just that. So yes, and you will hear those themes resonating from the video archive, Evan.
Fantastic. It's great to see, and we will definitely help to disseminate that recording. Okay, so in a slightly related topic, we so appreciate your leadership in creating the subordinated debt framework that enables credit unions to access external resources, and the recognition that the sub-debt process and product is complex. It's a complex instrument, and that can make it challenging for smaller credit unions to access this capital under the new framework. So we're very encouraged at the recent developments of NCUA working with Inclusiv and Inclusiv member credit unions to address the challenges that have come up under the new framework. And just wondering, could you speak to that process and timeline from your perspective?
Yes, well, first and foremost, I did rely heavily on a lot of the guidance from Inclusiv when we were looking at not just revitalizing our secondary capital or subordinated debt rulemaking, but also the role that you all play with ESIP, the Emergency Capital Investment Program. I want you all to have all of the tools that you need in your quiver so that you can serve your members. If there's anyone who is really providing service. I'm not saying that all of the other 4,800 credit unions are not all providing service, but Inclusiv does have that special niche, and that you're working with the community development credit unions, the low income designated credit unions, the MDIs and the CDFIs. You all are doing what Brian Stevens in his book, Just Mercy, talks about being proximate. You are proximate. You are right there living, working, worshiping, and spending time in those communities where the needs are most pernicious and intractable, and where they need that extra touch, that extra relationship that you all, through a lot of your credit unions, provide. And that is why I want you all to have the tools regarding ESIP. You all advised us, and we worked very diligently with you all when we had that interpretation that it would have to be 20 years and not 30 years, or else we were going to treat it as debt. And you all were saying, no, the rule makers wanted it to be 30 years. And we were able to work with you all in that. Many of you all from the Inclusiv membership, you all wrote the board. And by the way, you all, it was congressional intent that credit unions fully had 30 years from day one. Many folks on House Financial Services and Senate Banking, lamentably, were not aware that we had that 20-year versus 30 years. So we were able to work to sort of ameliorate some of those conditions, and now to pave the way forward, such that we voted on it at our most recent board meeting. Now it's a matter of 60-day comment period and all those types of activities. And I look forward to us getting, now, Evan, you want to define timeline. I know enough about government now not to give you a definitive date, but to say I'd like for it to happen sooner than later. I really don't know, just because, again, of research and getting everything published in the Federal Register. But the fact that you saw a unanimous board vote on this matter, I think bodes well. And now it is a matter of timing, and now just logistics. And maybe when I can follow up with you all again soon, I can let you know more of a time frame. But the fact, though, that it had a unanimous vote, that it's something that I've been working on, for 2 years now, not just the subordinated debt rule, but also an ESIP manifested itself. So it's been voted on. It's now moving out. I think you all will probably comment on the latest iteration. But with that being said, I recognize that there are some challenges, though, that you were alluding to. And some of those, you all, are that I do not want you to have tools that we make it impossible for you to utilize those tools, such as the cost of having the legal agreements and the contracts and things of that nature. We are, believe you me, looking at what can be done to either reduce the cost, or there are some of the forms and things of that nature that can be more boilerplate. But I recognize that you're wanting to do more with less. You're wanting to use the tools, and I certainly would rather you use the tools that we are affording you the opportunity to use. I'd rather those be deployed for, I don't know, helping with your fintech efforts, helping with your core processing providers, helping you do things of that nature, as opposed to having to do things with really expensive contracts. Now, again, I don't want to upset the lawyers on the call. I realize the important role that contracts play. Contract law is very important to me as a safety and soundness regulator. But at the end of the day, I do recognize that $100 million CDFI credit union is not going to have access to the same resources that the multi-billion-dollar credit union would have when it comes to law contracts and things of that nature. So that is something I know that you all have been meeting with our agency on. I think there was a very robust call recently around some of those types of issues. So you all, those issues are not lost on me. When I hear of an issue or that's an impediment, my natural instinct is to want to study it and see what we can do to really remove the impediment, of course, without any diminution in safety and soundness, but how do we really make it possible for you to use it? So the law contracts is a piece. It's something that we're looking into. I would love to see if there's also a role that some of the larger credit unions, I know many of the ones that are parts of Inclusiv, many of you have worked with other QSOs. And I also know that some of our larger multi-billion-dollar credit unions in times, they've given back office support. They've offered some guidance. I know many of our larger credit unions have really helped the smaller credit unions when it comes to maybe getting out of a contract with one of the core service providers. So there are things like that that I'm hoping that our large entities can do to provide that extra level of assistance. If I were talking about the banking industry, I would certainly not be calling on them to come together to help their own, but credit unions, because of that people helping people ethos that you continue to embody. I do think that there can perhaps be some shared solutions through either CUSOs, mentoring relationships, and things of that nature. And Evan, if I will, I want to take a sidebar. One of the things when we talked about secondary capital and how there has been an impediment around the legal ramifications, and again, there are legal contracts, it's just that that's so expensive for them. How do we reduce that? Another area, since I talked about core service providers, it's come to my attention that some of our smaller institutions are often not given the great opportunities to maybe leave a core provider if they want to work with a fintech partner. It's come to my attention that there are instances where they have been charged money just to have access to data that's rightfully theirs. I am working with Inclusiv and a group, believe it or not, called AIR, the Alliance for Innovation and Regulation, where we've taken a small sampling. Sorry, I get choked up talking about these really timely issues, but we're taking a small group of members of Inclusiv, the credit unions, and looking at funding that Visa and MasterCard have provided around how do you help these smaller institutions that can't compete directly with the Fiservs and Jack Henrys and FIS, but how do you really work with them to see what have been some of the challenges with legacy issues? How do we address those legacy issues so that these credit unions can use fintech technology? So there is a small working group that's looking to address that. And I bring that up because that's something that came to my attention. And when I heard that the National Bankers Association, that is I call it the Inclusiv for the minority depositories. So when they mentioned that they were doing a similar convening, I said, well, why don't we get some of our credit unions engaged? And I, as the prudential regulator, I certainly can't pick credit unions to be in a pilot program, but Kathy and all of your fine folks there at Inclusiv. So I'm looking forward to the day that you all will hear what's coming out of this focus group around 6 MDI credit unions, 6 MDI banks working with MasterCard and Visa around looking to see how they can tackle some of the issues that come about with some of the legacy service providers or core service providers. So a bit of a long-winded response there again, but wanted you to know how I try to be that forward-thinking regulator to bring real-world solutions to you.
Well, thank you again. I appreciate the comments, especially the reference to congressional intent on subordinated debt, because it really was the intent of the law to enable this type of borrowing from inclusive member credit unions, community development credit unions to advance those activities. So addressing the challenges with the new rule is very appreciated. I can tell you that we are working now with the Office of General Counsel to help improve the process with the legal forms, because as you said, I think a lot of the challenge right now is with the contracts themselves, the debt issuance.
And let's see if we can do what we can to simplify, boilerplate. And I needn't tell any of you all recognize that even the largest, most expensive law firms in the country all have the pro bono groups that they love working with not-for-profit organizations. So that is another thing, if y'all have not pursued that, would maybe see what can you do to really get in front of Davis Polk and Wilmer Hill and Cravath and all these other firms that really do, as mission, they do provide some pro bono support. And I think that that's something else that would really bode, maybe perhaps you all looking into as we do look for a solution here. But again, delighted that you all are already working with our general counsel. But again, more to come. But again, I'm glad that you all will be using the tools. And again, these are tools that can help you continue to remain relevant, viable, and to be there for your members when they need you most. And I love how we have about $500 million already right now outstanding in subordinated debt and secondary capital. So I look forward to seeing more of that put to play with the ESIP program.
Yes, and so speaking of ESIP, the last couple of years have been quite historic for community development credit unions, CDFI certified credit unions, MDI designated credit unions. as their roles as financial first responders have been finally fully recognized. And as a result, they've been given access to unprecedented resources, over $1 billion in CDFI fund grants, over $2 billion in 30-year low-cost secondary capital from the Treasury Department in the ESIP program. In your capacity, you visited many community development credit unions. I think last week you visited with Members Credit Union and
Yes.
Costa.
Right there in the eve, Evan, of my hosting the event with you all. So yes, was able to visit there and had a wonderful visit.
And next week, I think Stepping Stones in Delaware. Great to hear that as well. So I was wondering, could you share some of your insights and thoughts about the new level of resources now that are coming to community development credit unions, and how those resources will help impact the credit unions and the communities they serve?
Well, good question, Evan. And again, if I'm going to be a forward-thinking, progressive-thinking policymaker, I can't do that in a vacuum here in Washington, D.C., or where our offices are in Alexandria, Virginia. I need to see the individuals. I want to meet with them. I want to hear from their members and their boards. So that's how you all, when I try to make policy decisions, it is coming from visiting. As you know, I've had a very active travel agenda, speaking at conferences, convening events such as last week, going to different universities, meeting with the fintech community. So you all, if I am going to really leverage some of the resources that we even expend from NCUA. In fact, I know, Evan, you're mentioning the billions of dollars that are coming about, where we at NCUA are offering the $3 million in community development grants, and you all, that grant period has now opened. So would love for you to at least consider applying for our grants, whether you want it to be for technical assistance, cybersecurity, whatever the cases will be. Would like for you to apply for some of the grant funding from us. As with anything, you all, the grants that you're seeing now, it shows that Congress, it shows that corporate America, I know they're investing a lot in a lot of these initiatives as well. They certainly believe that the best way to really make a difference in a lot of communities, it is through the deployment of capital, through the deployment of resources, so there can be broader financial literacy. By the way, happy Financial Education Month. I'm hoping that you all are really continuing with that mission of providing education and training to your member owners and your local communities. And by the way, sidebar, credit unions don't just dedicate the month of April to financial education. They do it the other 11 months out of the year as well. But I just want to say, for those who are celebrating Happy Financial Education Month, happy. And to those others who celebrate it all year, that's fine as well. But the thing is, Evan, I would be remiss if I didn't say, why do I think there is such a windfall of funding and opportunities that are coming into the community development arena? Sadly, I think it was the death of George Floyd. I mean, when we all were sitting home in the midst of the pandemic, seeing the disproportionate impact that the pandemic was playing in communities of color, we were looking at inflationary pressures, unemployment pressures. We saw a number of things. And then the George Floyd incident occurred. And I think we all were just traumatized briefly by that, because we saw this egregious disregard for the sanctity of life play out right before our very eyes. I know I, for one, is the first man of color to ever oversee a banking regulatory agency. So no one had ever overseen FDIC, OCC, Federal Reserve, or NCUA. No one of color has ever done that. And I could have done one of two things. I could have watched in shock, as we all did, or I could have done something more demonstrable. And I wrote an op-ed that was placed in the Wall Street Journal, where I talked about banks and credit unions coming together to help society heal. And one way to heal is through financial inclusion and shared prosperity. So I was able to follow up with the op-ed, and here at NCUA, we were able to launch a new initiative that has now resulted in a new position for Access. The Access Initiative stands for Advancing Communities Through Credit, Education, Stability, and Support. And it is run by Natasha McAdoo, and she's going to be working with groups like Inclusiv and others to talk about financial education, helping credit unions produce small dollar loans. How do we help individuals really reach their full potential to the economic mainstream, and how can NCUA be a bridge for that? So we have seen now corporate America, as you know, the millions of dollars by way of commitments. When we saw a number of folks making investments in non-member deposits and MDIs, what you're seeing play out now with what I'm calling the windfall is that society recognizes that healing and growth can come with direct investment. I know the banks like to call it the Community Reinvestment Act. It's really hard to call it CRA because in some instances, these communities never even got investments in the first place. So why are we calling it reinvestment when they have never had that level playing field? So with that being said, the dollars are now coming in, and I think the more that folks can really show that the dollars are being used for reducing the wealth divide around stimulating loan growth in underserved areas, whether it be for housing or small businesses. I think the dollars are there because people are seeing the potential, and I think people are starting to see the results. So I tell folks that these dollars did not just come magically overnight, but it came because of the need. People are seeing the results. And again, I do think a lot of that did occur through George Floyd's death. And I do think that that's what catalyzed a lot of what we're seeing playing out today, whether it be through the dollars that you're seeing or also through a lot of the DEI types of initiatives. And I know we're going to talk a little bit about DEI in a bit, but again, I just want people to think this just didn't happen overnight, but it was a response. And I do think that murder catalyzed a lot of growth that we're seeing play out today.
Well, appreciate your leadership on that, because it's certainly an extremely challenging situation. And as you said, the Access Initiative at NCUA was really the biggest thing at the agency to come out of that. So to that end, you have been a champion for DEI, financial inclusion, some of the other important areas. Could you speak to kind of the legacy, your legacy at NCUA, since you will be transitioning out of NCUA? And as you said, the Access Initiative will tackle the civil rights issue of our time. And how will that live on after you've left the agency? And secondarily, what's next for Rodney Hood after you have after you've left NCUA?
Well, Evan, it's a really profound question, but unless I'm leaving next week, I'm not really planning to leave. At least I know I have a term that's coming to an end, but at some point, I'm still working hard and putting together risk summits and visiting credit unions. And I never finished that earlier part of the question about visiting members credit unions. So I want to go side back. I wanted to talk about genesis behind what's going on with CD, community development funding and all that. But yes, because of the passion I have around financial inclusion and all that, I'd like to see the credit unions that are the foot soldiers that are doing all that. So when I was able to go there and visit Kathy with members credit union last week, right there in Cobb, Connecticut, that borders probably one of the most affluent areas in the United States. And the fact that her credit union, members credit union, invited me in to talk about their strategy, how they're serving the underserved, how they have a loan officer who moved here, even though she had a degree from a college in South America, didn't speak much English and could not get gainful employment. But over paying off her loan, she was able to build a relationship with the folks there at Members Credit Union to the degree now that she's gone from being that person who came in on Fridays to pay off her loan, who, by the way, was working as a housekeeper for one of the I guess, grand estates there in the Greenwich, Connecticut area. But to go from that, but to be able to have a chance to leverage her education, learn English, and now be a loan officer, a senior loan officer at Members Credit Union. Talk about a success story. Talk about Horatio Alger stories coming right before your very eyes. So for me to see her and hear her story and how she's now, ladies and gentlemen, working with other members of that credit union. I was able to meet Mr. Washington and see all of the folks who were coming into that credit union during my visit. I felt like I was a temporary members credit union, I don't know, board member for the day, in the sense that I could see them in action. And it's easy for us to send me an email and tell me how you have someone who moved here from South America and she is now working with you. But for me to hear her story, to hear the passion, and to really be able to put that all with seeing the members in the lobby, and also Kathy, I don't know if Kathy's on with us today, but seeing that popcorn machine, I know about Popcorn Fridays and all that. So you all, the pictures really become real world. They allow me to make policy decisions, not based on Washington, quote unquote, rhetoric, but based on real world externalities. And that is why I can't wait to see credit unions all over the country. And again, I go see them all, but I do have a special place in my heart when I do get to see those CDFIs, those LIQs, those groups that really are, as again, Brian Stevens mentions in his book, Just Mercy, being proximate, being close to where the greatest need is. So hats off. And if I haven't visited your credit union, perhaps in my remaining time, Evan, I can. But as it relates to the NCUA board, yes, I'm excited about DEI. You mentioned legacy. So yes, I've long preached and practiced the tenets of diversity, equity, and inclusion. But you all, we've called these things differing names in my nearly 30 years in the industry. It's been called community development, urban renewal, community reinvestment. I do think diversity, equity, and inclusion, it does have a bit more staying power today because you're seeing it more professionalized. And what do I mean by that? You're seeing a lot of training sessions devoted to it. In fact, I recently was asked to be a guest lecturer at the University of Pennsylvania at Wharton School of Business, where I gave the business case for sustainable DEI, where I talked about not looking at DEI just because it's the buzzword at the moment, but how are you developing and cultivating an effective DEI strategy? Meaning, are you creating employee resource groups? Are you looking at inclusion? Are you taking a broad approach to when it comes to DEI? I like to remind folks that, yes, DEI, it does entail people who look like me, people of color, but are we thinking about tribal communities, rural communities, disabled, differently abled, first generation college generations who are navigating in the career space? What about justice involved individuals, those folks who, one of 60 million people who have had an involvement with the criminal justice system, who may have paid their debt to society, who are ready to now be fully engaged and integrated. So I try to get folks to look holistically and broadly at DEI. So I hope that's been my legacy to DEI efforts at the NCUA. I hope the fact that in my first year as a returner to NCUA, when we hosted the DEI Summit, I announced from the stage that we're going to do a summit each and every year, and we're doing that. And I'm delighted that Chairman Harper's continuing in that legacy of having NCUA do a DEI summit. And if you've not heard, this year's summit is going to be November 1st and 2nd here in Washington, D.C. 2 days of speakers and talking about the business case, but also are you looking at minority procurement? We all do so much in the outreach, but are we doing a lot of hiring? I'm proud of the fact that to bolster our DEI efforts here at NCUA, we have a new recruiting director who is going to go recruiting at communities that serve minority populations and also disabled populations. We've gone to Gallaudet University here in Washington, which is a college for the deaf and hard of hearing. We've hired an individual from Gallaudet who's working with us as a new examiner. So yes, we're going to make sure that we have the closed captioning and the ASL interpreter. So again, let's look broadly and more holistically at DEI. And I think when you give it that broad approach, it makes it more long-standing. And I also think it gives it an opportunity for all areas of your group to do it and to embrace it. So DEI, I think, is a legacy that will live on. I also applaud the fact that you all are inclusive. You certainly do preach and live its tenets every day. So there are a few other things that I will share at the appropriate time. But for right now, yes, the term may be ending, but I'm not just sitting waiting on the clock to tick. I'm still working on a few rulemakings. I'd like to see us have a loan participation rule soon. would like to have us have you with the ability to really use some of the other tools that may be coming your way soon. So Evan, I'm not sitting and just smiling for cameras, but there's still a lot of hard work at play as I do serve out my term.
Yes, well, that's great to hear. Don't stall press. You use the time that you've been given, and it's great to see all of the various advancements in all of these important areas. I think we have a few minutes left, and we could transition to audience questions. If there are questions, you can put them in the chat.
Thanks, Evan. Well, while we wait for that, would you mind if I just show a few more slides on, there it is, upcoming events. Just Board Member Hood, thank you so much for reminding us about the November event that the NCUA will be hosting. I did want to highlight something a little closer calendar, May 1st through the 3rd, the Inclusiv Conference 2023 in Memphis. The NCUA will be there. They'll be present. We're going to have a few other folks as well. I think this is actually the largest number of registrants we've ever had in an Inclusiv conference. So we're very, very excited. If you haven't registered yet, please do so. When we share these slides, this slide will actually link to the registration page, so you can do that. Also, just a quick reminder that the Inclusiv CDFI certification office hours are every Wednesday afternoon at 3 p.m. Eastern time. So please do check into that if you're interested in more information around CDFI. And of course, the CU operations and compliance team has their every fourth Tuesday call of the month from 1 to 3 p.m. And just a reminder, we will not have a May Town Hall Series call, but we will reconvene on June 13th for the 1:15 p.m. session. We'll be sharing more information about that shortly. Now, I'd like to turn it back over to our audience. If you do have questions, feel free to enter that information into the chat, your questions into the chat. BRE did already share that they had an amazing time at this, and thank you all for the amazing information. So that, not really a question, but I did want to share that with you, Rodney, and with you, Evan.
Well, thank you. I'm honored. And I also see a Venta Credit Union in Colorado Springs, Patrick Harrigan. Patrick, did you know that I'm going to be in Colorado Springs this summer to speak at a credit union conference? So don't know where you are in Colorado Springs, but would love to see you all. I don't think it's that large where I can get lost too quickly. So maybe we can plan on following up offline.
Excellent. Well, Patrick, do keep an eye out for that, and please do get in touch with Rodney about connecting while he's in Colorado Springs. I did see a question from Jamila Collins. How can we obtain the business case that was presented at the Wharton Business School?
You know what? That's a good question. Let me put pen to paper. You know what I did, Jamila? I actually had a lot of notes, and I just compiled the notes together into a format there where I was able to talk about the issues around employee resource groups and all that. Jamila, what you've done is you've inspired me to put pen to paper to have something that I can share with folks. Can you give me a little bit of time to put something together? And I would be happy to. So I basically spoke about DEIA for 90 minutes, and I often add the A for access. So you will often hear me talk about diversity, equity, and inclusion leading to broader access. So let me follow with you, but I wish I could see if there was a PowerPoint. Not yet, but maybe in due time.
Excellent. Thank you, Board Member Hood. And it looks like Jamila appreciates that as well. Any other questions from the audience? And Evan, also feel free to jump in if you have some additional questions.
The only question I think might be helpful that I would have here is going all the way back to the capital markets symposium and the tools that people have. You mentioned SVB and the interest rate risk challenges that they seem to not manage as well as they should have. But you know, the interest rate environment has changed very quickly, as everyone knows. If credit union managers are looking for, to avail themselves of new solutions, are there any recommendations on places that they could start, either with the agency or elsewhere?
Evan, good question. I would say that one of the best places would be the supervisory guidance letter that we gave probably about 4 months ago when interest rates were beginning to rise. That was, may recall, you all were doing the net economic value supervisory test where you were shocking your balance sheets 300 basis points. But then remembering you all that Fed had already raised them some 425, now 450 basis points, it almost rendered that test, I wouldn't say useless, but what was happening is many of our credit unions were going to then find themselves in the impaired category, which meant that you all would have had to have gotten a document of resolution. So what are we doing now? We are now asking that you all really, we at NCUA are looking at your interest rate risk mitigation strategies individually. We're looking at a principles-based approach. It's what are you doing to look at risk from an interest rate perspective based on your asset size and complexity. You all, what we're looking at, even though we're not looking at that tool as much, we're looking at what are you doing? Are you adhering to your interest rate risk policy? If you've not been adhering to the policy, why not? Have you documented? Have you tweaked the policy? It's all right to be responsive to market conditions, but just make sure that you're noting that. How are you pricing your loans? What are you doing around maturities of some of your assets that you're holding for sale? Those are all the things that we want to make sure that you have a knowledge of. And that's what I think is so important now. But the letter that we sent out did make sure that you all understood that, yes, we recognize that the conditions are different, but we're making sure that your boards, your CFOs, and all of you are looking at these issues holistically. And I think the best thing to do, you all, is make sure that you've updated your policies and that you're adhering to the policies. And if not, document why. I don't think anyone really can underscore the significance of your policies and how the examiners look at them. And that's rather it be for interest rate risk. Credit quality is something that our examiners are going to be looking at during this year's supervisory priorities. So making sure that you've documented the reasons that you may have done a troubled debt restructuring or loan modification. So not saying don't do those activities, document and be able to explain why. So back to the interest rate piece, be able to talk about what you're doing proactively and document it.
Great guidance. Thank you.
And hope is
Thank
not
you.
a strategy. And hoping interest rates go down is not the strategy. So that is something that we would not encourage.
That's very helpful to hear. I know that we're at the close of the hour. If you have 2 more minutes, I would love to ask one final question and then of course close out. Is that all right with you?
Of course. I never get this as my first invitation, I think, to an inclusive town hall. Only after 4 years. My goodness. So thank you.
Well, I know we've had you on another webinar, and it may, I think what we had to do was do a special session just for you the last time, but I'm really happy that you're able to participate in this series.
I'm delighted to. So go ahead. I interrupted.
Excellent. Well, I just wanted to say, first of all, this is not acknowledged in the question, but I wanted to thank you. I know the NCUA has been looking at chartering groups that are looking to organize new credit unions and making that process more possible and more streamlined for organizing groups. This question is from Brian. The US Treasury just came out with an item about there not being enough de novo banks. Is the NCUA involved with this at all concerning credit unions and looking at further making it possible for new institutions to be established?
You know what, that's a question that's really near and dear to my heart. And yes, we are looking at that. And we've been looking at that issue well before the Treasury study on the need for de novo banks. You all, I would say from the moment I arrived at the agency in 2019, and I know the vice chairman We want to see de novo institutions. Yes, we have 4,800 institutions now, but I certainly want to see us streamline the process. As you all know, that is handled by CURE, the Credit Union Resource Expansion Team that's run by Martha Ninachek. She is looking at opportunities where we can fine tune and expedite that chartering process. By the way, we just have chartered 3 new credit unions. There is a tribal credit union that was recently chartered. There is a members only credit union that serves the ladies of Alpha Kappa Alpha, which is an African American sorority. I was just able to meet with their credit union leaders at their annual convention. And also in New York, not that far from Inclusiv's headquarters, there is a new Episcopal church that is doing a credit union that has the full support of the diocese. So yes, we are seeing new credit unions. De novos, you all play such a pivotal role in terms of, again, being proximate to where those community needs are. So yes, I want to remove the impediments. I think that we're seeing a number of folks who want to join the new credit unions. They want to have them have access to non-member deposits. As you know, the de novos also get access to secondary capital, subordinated debt. So yes, we want to streamline the process. I certainly want to remove the impediments that have existed to date. And I think it's just been so confusing. So if we can have a concise set of documents to foster and bolster more de novos, I'm all for it. And when my schedule permits, I love presenting charters to those new credit unions because they get to join the whole system of people helping people. So let there be more. I'm really willing to do my best to make it possible.
That's fantastic to hear. Thank you so much for your support there. And I'm seeing shouts out to the ladies of AKA in the comments. I just want to ask our CFO, Evan, do you have any other points that you'd like included in the discussion?
I am all out of questions.
Excellent. Well, I think this was a great conversation, a very robust discussion. Thank you so much to Rodney Hood, NCUA board member. We really appreciate you joining us. I just wanted to mention in the comments, I'm seeing Larry Jackson from the Reverend Larry L. Jackson from Park Manor Christian Church in Chicago, and the Faith-Based Credit Union Alliance took the words right out of my mouth. He said, this is directed at board member Hood. Thank you for your leadership, your legacy, your commitment to the credit union movement. And I'll just add, thank you so much for making yourself available and really supporting the work of inclusive credit unions in reaching the communities that are so important to them. So thank you so much, Rodney.
You're indeed welcome. Thank you, Reverend Jackson. Look forward to seeing you when I'm next in Chicago, but you all, Inclusiv certainly does carry forth with the mission that I have of financial inclusion. That's a civil rights issue of our time. Thank you for your hard work. And I bid you all a wonderful day. And I am going to run to my next event so I can work on some of the things I tell you that I'm working on. So bless you all and thank you. Bye-bye.
Thank
Thank
you.
you so much.
Take care.
Have a great afternoon. And to everyone else, take care. We look forward to seeing you in Memphis in 2 short weeks. Talk to you all soon.